Hello, everyone. My name is Matthew Frailey, founder of BreakpointTrades.com. I founded it back in 2003 to provide advanced technical analysis, market commentary, trade ideas, and sophisticated mechanical trading algorithms such as our 21 mean reversion systems and our KISS trend following systems. By the way, one of the mean reversion systems actually triggered today, and I'm going to discuss that. And also, guys, regarding YouTube, even though I started Breakpoint Trades back in 2003, really only been focused on YouTube for the last year. And you know how YouTube is. It's all about consistency. It takes time to get traction. Plus, this kind of content doesn't apply to a lot of the masses, like, say, Mr. Beast, who has all the fun videos and biggest YouTuber out there. But one thing that happened is our subscribers, more than doubled in the last several days. Not sure why, but I'm humbled by that. Thank you for all your patronage. And I promise to continue to provide the best education, trade ideas, system trades that I can. So again, I'm humbled by that. Our subscription, like I said, almost tripled in a week. Pretty crazy. Anyway, let's get back. Markets, as you know, today was a big sell-off today in the market. S&P sold off almost 80 points, so a huge down day on the FOMC. We've been expecting at least a 5 to 10% correction on the market. And while it's too early to say that that has started, it's possible that it has. And I'm going to discuss that in tonight's newsletter. So let me get our webpage newsletter started. This is for our website. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, January 31st, last day of January, newsletter. Tonight's newsletter, as you can see, divided into 7 major sections. By the way, quick admin note, Steve Nelson was out today. A lot of you already know who are on the website. He actually tested positive for COVID, so let's pray for Steve. Hopefully it's just a minor case and gets better soon. So more than likely, I'll be doing the newsletter tomorrow, as I doubt he'll be recovered by tomorrow for his Thursday newsletter. Anyway, newsletter is divided into seven major sections. As you know, big old sell-off today in the market. The S&P lost almost 80 points, 79 points basically, 1.6%. That is a big down day. NASDAQ lost over 2%. Russell 2000, IWM lost about 2.5%. Also, again, it was a pretty broad-based sell-off. We follow 20 of 21 sectors, and 20 of them were down, so very broad-based sell-off. Again, we finally had a rug pull, and I didn't have a YouTube video yesterday, but in our newsletter for our website subscribers, we discussed our opinion that based on the charts, we're looking for a 5 to 10% correction in the market at any time. And I almost made a video yesterday about it, just didn't have time. And of course, then we had the FOMC today, and that ended up being a good catalyst for the big sell-off. Again, it's still possible we could still push up again, but it's also possible that we put in that little intermediate high and then we've started that correction. Okay. Again, as you know, today was the FOMC. Rates were kept the same, but the market didn't like Powell's comments. Again, the problem I've had with the market is they've been so aggressive about pricing and rate hikes. And today, Powell confirmed that there's going to be no rate cut in March. Now, they did walk back some of their other more hawkish commentary, but they added that in. The market was expecting a rate cut very soon, and we're not getting that. So big old sell-off. Again, that's all the market cares about. It seems like the last 10, 15 years is rate cuts, what the Fed's going to do, when's the Fed going to cut rates, et cetera. Essentially, we have this artificial market that's formed in the last 15 years. And it also has the effect of creating much stronger moves, volatility than I remember in the past. I've been doing charts since 1997 when I started Monsanto as a chemist. Anyway, besides the FOMC, key events left for the week. Again, obviously, we had a lot of tech earnings the last couple of days from Apple and Meta. And, the tech stocks were essentially priced to perfection. The charts were extremely overbought. And so a lot of them have come in instead of rallying further on earnings. Not surprising. Had the stocks been selling off coming into earnings, then I think they would have popped. But again, everything was priced to perfection. And as far as key events left for the week, Thursday, tomorrow, we have initial jobless claims, ISM manufacturing, natural gas inventories. And of course, Friday is the non-farm job payroll reports and ISM manufacturing. So we'll see how the market reacts to that. And today, with that sell-off, we did have one of our mean reversion systems trigger on SPY and ES, and I'm going to discuss that in a second, but let's go ahead and move on. Now, regarding the KISS trend systems, as you know, they've been actually knocking it out of the park, especially since the October lows. We've had the KISS systems beta version out since early summer. We run the KISS systems on almost 650 individual stocks and ETFs. It's a non-curve fit trend following system that is profitable on nearly anything. It's long only. It gives you these smart trailing stops that ratchet up over time. So again, it's going to do better in uptrending markets. But anyway, the reason I'm showing this today is because, again, if you haven't done so, if you're a subscriber, make sure that you have set this to receive email notifications on your favorites. Go to the KISS section, set some favorites by clicking the star, and then go to the favorites tab on the upper right, click that to receive the emails. You have to click it yourself just because of spam laws. So make sure to do that and you'll get notified whenever there's a change to your favorites. So today, for example, Apple hit its smart trailing stop. It ended up taking about a 5.5% loss on that. Not surprising. I mean, the last trade was a winner on the KISS system. And Google closed out just a paltry gain. You can see what's open on some of my favorites, like CrowdStrike's up 89.5%. Still really nice gains here. But if the market does have a nice little correction here, then we're going to see, quite a few of these start to hit their smart trailing stops. Next, image number 3. This shows you an example of what like an email would look like to the KISS systems once you set your favorites up. Now, this is from yesterday, but you get a nice clean email, nice clean table showing you your favorites, the changes that occurred that day, if there was one, if there's a new smart trailing stop, new entry, etc. So again, make sure you set up your favorites. And if you're not a subscriber, you're just a YouTube viewer, you should consider subscribing to get access to these amazing systems. Next, let's talk about the mean reversion system. So in addition to the KISS systems, for many years before the KISS systems, we had these mean reversion systems. And mean reversion systems, many of you are familiar with them. One of the famous ones is Larry Connor's RSI2, where you take a RSI indicator. Most of you, especially if you're looking at this kind of video, you should know what an RSI indicator is. So there's Larry Connor's popularized taking a 2-length RSI. If you're above the 200-day moving average, when the 2-length RSI falls below 10%, that triggers a long. If you're below the 200-day moving average, if the 2-length RSI goes over 90%, that triggers a short. So that's one example of a mean reversion. Mean reversion systems tend to be very short term, but generally highly profitable, 80-90% winning trades. So what I've done at Breakpoint Trades over the years, instead of having one mean reversion, I developed around 21 of them, all different kinds. You can see the different names here from, pullback, bear long, RSI oversold, S-trap. They're all looking to do different things. It's kind of like a shotgun approach. Anyway, one of these triggered today, and where is it on here? It's the QE Momo. I don't see it listed for some reason. Anyway, but let's take a look at that. Before we get to that, so again, just in case you aren't aware, this is an example of graphic I made up of mean reversion systems. So again, typically in a downtrending market, so you're below a longer term moving average, mean reversion systems will typically try to short rallies and downtrends. Sometimes, you can also take very oversold conditions where the moving average ribbons get too stretched for a quick trade, but primarily they look for shorts in downtrending markets. In uptrending markets, they look to buy pullbacks primarily. And all the moving averages are pointing up above all the long-term moving averages. And so the mean reversion systems are primarily going to look for long ideas. And you can once in a while get a short trigger if things get really, really overbought, but we haven't seen any of those exhaustion mean reversion systems trigger. So again, mean reversions kind of like analogous to stretching a rubber band too far, it snaps back. Next. So what triggered today, out of the 21 systems, the QE Momo triggered. It triggered on both the SPY ETF and ES futures. I run these systems on both the SPY ETF and ES futures. Yes, they're obviously, basically the same instrument, 99% correlated, but you're still going to get different trades. So it's kind of an averaging effect. That's why I do both. But so this one triggered today. Now this QE Momo tends to be a very short-term trade, usually only a few days. Has very highly profitable, but also if the market were to have a deeper pullback before a bounce, it could get caught and take some drawdown. So it's just something to be aware of. But that triggered on SPY today. Next, image number 7. So here's the mean reversion systems for SPY. So you can see this year, 2024. And last year we had 32 trades triggered of the mean reversion systems triggered on SPY. In 2022, during the bear market, we had almost 100. The mean reversion systems are much more active in bear market conditions because of the high volatility. Last year, we didn't have a lot of volatility, so there wasn't as many trades, only about a third of the trades. But they still did fine here. Again, not every trade is going to be a winner. And you can see this year, this is trade number 3, QE Momo. And we'll see if this can close out over the next couple of days. If we have a good 1 day or 2 rally, it'll likely close out and go back into cash. Okay. Next. Image number 8, here's some of the mean reversion long systems for the ES futures. And again, the QE BTS or QE Momo triggered down here, you can see. Okay. None of the others have triggered. Next, image number 9, here's the mean reversion system trades for the ES futures. We trade MES, that's the micro contract. Easier for people to stomach, but again, last year, mean reversion systems had about 39 trades. This year so far, this is the 4th trade, QE Momo. And there actually was one earlier this month on January 5th. And on ES futures, it made about $800 because it made 80 points, which was a pretty nice, impressive gain. So this system's up. Again, for subscribers of the website, I emailed this out shortly after the market closed. And so hopefully some of you, or a lot of you, follow our systems. I'm sure quite a few of you took the trades. Again, if you're just a YouTube subscriber, sign up to the website so that you can receive trade notifications when these systems take a trade. Here's the statistics on this QE Momo that triggered on SPY and MES. So SPY on the left here, profit factor of 81.5, which is pretty insane. Now, what does profit factor mean? It's the gross profit divided by the gross loss. So it made $6,869. It lost $84. On systems, profit factors of 2 and 3 are generally considered good. So that's pretty crazy. About 90% winning trades, 40 trades since 1995, 1996, I have this going back to. And the max drawdown was $330 on $10,000, which isn't that much, about 3.3%. Here's on ES, less profit factor, 16.29, but still very respectable. Higher winning percentage, 94.3%, 53 total trades. Okay, so that's what triggered today. Whenever these look to close out or there's the next trade, I will let everyone know on the website. Next, let's get back to the general market. So here's the index sector table, what transpired today and this week. So you can see the huge down day today. NASDAQ down 2.25%, NASDAQ, S&P down 1.6%, Dow down 0.8%, Russell down almost 2.5%. Everything's now down for the week except for the Dow. As far as the 21 market sectors we follow, everything was down except for drugs, and that was only slightly up. And now for the week, the majority of the sectors are down. You know, what has been very strong is the energy market sectors, oil services, XLE, last week especially. And they're now down for the week. Oil services down over 4.5% this week. Currencies, US dollar up 0.2% today. Cryptocurrencies pulling back here as well. Commodities, mostly to the downside here. Again, crude oil is down 2.5%. So the DBC index, commodity index, down about 1%. Natural gas bounced back a little bit, 1%. Copper slightly down. Kind of a mixed bag here in the agriculture area. Precious metals, well, they're still up for the week, but they were down today, especially silver. The stocks were down quite a bit. They're leading to the downside. And as I've been always stating, you need to see the stocks outperform and they continue to underperform. Now, the market sold all today despite the big drop in interest rates. 10-year, 30-year had a big drop. Next, image number 12. Here's the economic news calendar, which I already discussed. Like I said, Friday, non-farm job, payroll report, factory orders, and Michigan sentiment. And on Thursday, initial jobless claims, ISM manufacturing. Let's go and jump to the index charts. First chart below, image number 13. Here is the Dow. If you're on YouTube and you're wondering what I mean by image 13, so on our newsletters for the website, each chart has a number designation. So for people following our newsletters that are not a video, they're a static recording, allows people to not get lost. So anyway, but so the Dow here, again, nice pullback. It's still above the 9 and 20 EMA. So again, it could still recover. We're still above all these short-term moving averages. All the moving averages are pointing up, but we have what appears to be possibly a little fifth wave high. We have this obvious MACD divergence, RSI divergence. And so it's possible we have a little, pretty decent high in here. But again, we could also recover because we're over the 9 EMA. Sometimes you have the opposite effect after the FOMC, so we'll see how things act tomorrow. But definitely things were getting quite tired. Next, let's move on to the S&P 500. So here's the weekly chart, which I've been showing. Remember this channel I've been showing for a couple weeks? We tagged the upper channel line and we pulling right off of it. That confirms that resistance. Now, the previous all-time highs at 48.18, that is potentially a little support, but otherwise, if we lose that, then you have the 9-week EMA. But again, logical pullback right from that channel line. Next, chart 15, here's 4 charts of the major indexes. This has some of our custom indicators. So this also has the KISS systems on the weekly time frame. Smart trailing stops are still very wide on these because, again, they're weekly charts. They give a lot of room, kind of like watching paint dry. But I've been pointing out the Mark 13 all week on the S&P, the NASDAQ, and the Dow. And while you don't have to stop there, that is something to note, and that could be a logical area for us to pull back from finally. Next, image number 16. Here's a daily view of the S&P. Again, hell of a rally from that October low. I think that was one of the strongest 3-month rallies in history, quite honestly. And that 4,600 was a major resistance, which we took out in early December. Now, here's the thing, guys. Just like on the Dow, we have very obvious MACD divergence here. And we also lost the 9 EMA today. When you close below the 9 EMA, you almost always test the 20. So that's right down here on 4,800. Again, that moving average is moving up, so it'll be a little bit higher tomorrow morning. But here's one thing to consider is that, so the largest pullback previously was 112 points. That was in December into early January. That represents your symmetry. So if we have a pullback larger than 112 points, that'll be a break in symmetry, and that'll likely set the stage for the next bounce to form a lower high. That'll put much higher odds that we got some sort of trade high here. Okay, so 112 points from the 49.31 high would be around 48.19. You'd have to go below. Okay, so we haven't broken that yet, but that's something to watch here. Next, image number 17. Here's a slide I made on symmetry a couple years ago. Again, symmetry is a very powerful tool. I have a YouTube video on it. I should probably redo it since it's been, a good year, 2 years, but you should go on YouTube and look for that. But again, I'm not going to go through all this in depth tonight, but symmetry is a very powerful tool. So for example, when you're uptrending, you note the depth of the pullbacks. And then once you have a pullback larger than the largest pullback, it's typically called a break in symmetry. So when you're uptrending, that almost always then forms a lower high. So it's a very powerful tool to confirm the end of that trend. And also, not only that, but that tells you to look for a short in the next rally. So if we break symmetry, we could have something like this. Okay. Again, symmetry works on the downside too. Next. Image number 18, here's the KISS trend system for the S&P 500. Again, the other day, the smart trailing stop moved up a good 150 points from 46.84 to 48.23. Pretty tight here. We could almost hit that. Wouldn't take much. We'll see if we hit that. You can see we had a DeMark 9 yesterday, and that was a little warning. Okay. And this is your ATR, short-term support. The system went long back in late October, so it's going to be profitable no matter what. But it's, this is really tight now. This is also a good example of the KISS system. So the KISS systems, unlike the mean reversion, and they're very powerful. They'll catch huge trending moves, but they don't have as big a winning percentages. The mean reversion systems might have 80, 90% or higher winning trades, whereas the KISS systems may have 60%, sometimes 50% winning trades, because you'll catch a big trender like this and you get a little whipsaw. I bring that up because let's say this hits a stop here. That gives, since that'll be a nice big winning trade, that gives a little higher odds for the next trade to be a whipsaw. You never know, but it's just something to consider. Next, image number 19, here's the 4 time frames. Again, we had a DeMark 9 in the daily. We're still holding that for now. We lost the ATR on the smaller time frames. We got a little support cycle there on the 78-minute. Futures are bouncing a little bit tonight, and we'll see if that can continue. Again, that mean reversion system triggered the QE Momo, so I wouldn't mind seeing a bounce tomorrow to get that trade out and close it out nicely. Chart number 20, here's the half-day chart. Remember, I've been showing this little ascending triangle that played out nicely. Now we're pulling back quite a bit, and first support is the 4,800 area. If we have put in a high here, guys, for a while, what I'm expecting is an eventual pullback down to this 4,600. This was previous major resistance, and remember, that is now major support, right? So if we do have a high in place, that's why I was saying a 5 to 10% correction. I think it's I haven't done the math here, but I think this is 6% correction, maybe down to here. I'll have to do the math when I'm not on the video, but that's one thing I'd be looking for. But again, what I don't look for here is, let me just draw this in for you. What I don't see is of just going straight down to here. Again, let's say you break symmetry here, remember from the slide, then you rally, form a lower high. That's your better short, and then you come down here. And then I think we go up again. Move on. Image number 21, here's 30-minute view of the S&P. Again, small little pop out of that little ascending triangle here. Didn't go very far. We set up divergence, MACD and the RSI. Nice sell-off. Again, this is kind of your next big support range around 4,800. Chart number 22, here's a 15-minute chart. Shows you the same thing, but here I added some fibs. So should we bounce and form a lower high, watch for one of these fibs for the market to struggle at. Oh, and chart number 23, this is the 15-minute chart. The last one was the 30-minute. So has the same thing, fibs here. We are into a little demand zone right here, and we'll see if we can bounce off of this. Futures are up a little bit tonight, but again, things could change. Now below this area, this is kind of an air pocket. So if we were to lose this, say 48.40, there's really not much support until you get down to this 4,800 area. Right here offers a little support. Next, chart number 24, here's the SPXU. That's the triple inverse ETF for the S&P. Big pop, obviously. Again, this has really been diverging. And yesterday, you really had a perfect setup here. You had a very tight doji. You see the 2 lines I added? Because when you have something like that, now today we gapped, but what you would have done is bought this and put a stop immediately at that 786 low. I always round it down to 785 or something like that. Or if you bought this yesterday, but would have been just an excellent risk reward. Now, This 20-day moving average to me looks like the first potential target. Chart 25, here's a 2-hour view. Again, you can see we had a nice MACD divergence. Everything was lined up. And this was your next, basically, supply zone target area. Next. Chart 26, moving on to the triple Qs. So here's the weekly view of the Qs. And this is the chart I've been discussing, this wave count. To me, I don't see anything wrong with this wave count. You know, the problem about Elliott wave counts, there's always alternatives. But this count does look pretty plausible to me. So we had the bear market in 2022, as you know. And from that low, what I see here is a nested 1, 2, 1, 2. What I mean by nested 1, 2 is you have a wave 1, 2 here. Then you have another wave here. That's a smaller degree wave, a smaller fractal. So the high here was a wave, minor wave 3. And then the pullback in the fall time frame wasn't a minor wave 4. And this new rally I've been counting is a minor wave 5 of 3. Remember, if you go back and look at my newsletters of the last couple months, even during the big rally, I've had this count in place. So it's not new. Anyway, if we've set up this high, I view this as a minor wave 5 of 3. And we should get some sort of pretty decent ABC pullback as a wave 4. And then once that occurs, then you get yet another rally to new all-time highs in a wave 5. Okay. But again, this wave 4 is a larger degree than the one that was in the fall time frame. This is a major wave 4, that was a minor wave 4. So this wave 4 could be deeper in price or time, either one. Next. Chart 27, here's the Qs on the daily. Here I added some channel lines. We're still holding those. 20-day moving average just below. Wouldn't be surprised if we tag that. Largest pullback we've had is 17.5 points roughly into the first part of the year. We haven't broken symmetry yet. We need to fall below 412 to break that symmetry and confirm a high. For now, we could still recover here potentially. Next, chart 28, here's the KISS system for the Qs. Again, no changes here. Similar to the S&P, went long in October 31st. Smart trailing stop here is wider than the S&P. It's at 404.60. Okay. Next, chart 29, here's the 4 time frames. Now on the Qs, you had this end of bull cycle, which it's the cycle indicator trying to postulate a 5th wave high. Doesn't always get them right, but if we have a pretty good top here, then it likely is. Still holding the ATR there. We had a mark 9.5 day, which ended up marking that nice little high there, just like it did back there in mid-January. And let's move on. Chart 30, here's a 30-minute view of the Qs. So Steve talked about this little 5 waves down. And actually, the 5 waves down was bearish because whenever you have 5 waves down, that's indication of
the reporting
not
coming out of the FT and
correction,
Bernstein suggesting that they've been spending,
but the start of a change in trend. So remember, pullbacks and uptrends are ABC, stuff like that, not 5 waves. So then we formed a lower high coming down. Here, shaded areas are some open gaps. Those are often magnets. I wouldn't be surprised if we at least fill these. There's a demand zone. That's your next demand zone. So charts do not look too pretty here. Even if we bounce up here, say tomorrow, I wouldn't be surprised if we come down to these levels eventually. Next, chart 31, here's IWM small caps. Again, huge sell-off today. Weakest index. Sliced right through the 9 and 20 MA. Next logical target would be the 50-day. I think we at least tagged that. Chart 32, there's the monthly view. Again, this shows you the longer term support down here, which we held over the last couple of years, and of course, long-term resistance. That does it for the major indexes, guys. Let's go ahead and move on. Let me do a quick check on futures here. Futures are up a little bit tonight, like I said. We'll see how they fare in the morning. Looking at some of our indicators, chart 33, here's the VIX. Nice rally. This is something to watch as well. If the market has put in a high and we sell off again, watch to see if the VIX closes back above its upper Bollinger Bands. For now, it's still below it. Next, chart 34, here's the NYSI McClellan oscillator. This is the 9 EMA crossover system. Again, there's been these divergences forming, as you know. So you have a big old divergence that has been setting up here all month while the S&P has rallied to new highs. This indicator is lagging, so a divergence. Chart 35, here's the percentage of stocks in the S&P 500 above their 20-day moving average, same thing. While the S&P is rallied to new highs, this thing is just not kept up with price. Next. Moving on, just looking at a few of this market sectors. Here's XOK Technology. Remember, I had that black candle doji late last week. Those black candles are often areas where you get reversals. You could see one there in late December, right there. You could see one there in November. You could see a couple there at the September lows. You could see one there at the August highs. So the black candles, while not perfect, they're definitely a warning. And we've got a nice pullback. Since we sliced through the 9 EMA today, probably at least tag that 20-day. Chart 37, here's the 60-minute chart. Whenever you see a potential topping action, always zoom down to a 60-minute time frame, guys. On the 60-minute XOK, you get a very obvious MACD divergence here, RSI divergence, and that was your confirmation. Next, chart 38, here's XLC, communication sector. Has a lot of those FANG type names in it. It was going parabolic essentially. So finally, some rug pull today. Likely at least tag that 20-day now. Chart 39, here's XLE Energy. Again, this has been a strong area over the last couple of weeks. Finally, a big pullback today, though. Again, it never took out its downtrend. Again, it's possible that it put in a low here, but it was up near resistance, so pulling back. Chart 40, oil services, still in the downtrend channel. Again, why has price been pulling back? Oil services rallied right to the top of that channel where it sold off from logically. Okay, that was an area, if you were long, to have taken profits. Okay. Finally, chart 41, there's the weekly view of oil services. Again, that's your major resistance long term. Next, chart 42, ExxonMobil. This is one of the long ideas I put out in the energy sector a couple weeks ago. My trigger was off the doji candlesticks here. Hell of a rally. Hope you took at least some profits, as it gave quite a bit back today. But again, it's wildly profitable from that entry. Chart 43, VLO was another long idea. This is from the weekend or late last week. Pulling back a little bit off this supply zone here. Chart looks okay otherwise. Chart 44, IYT transports, pulling back from that upper resistance. Again, it kind of has a cup and handle look, but unless it recovers, this may need more of a pullback. Your 50-day moving average is your first support. Chart 45, financials, XLF, again, bit in nosebleed territory. Nice reversal candlestick today. Just like in the other indexes, you have this big old MACD divergence potential at the highs. Chart 46, banks, nice pullback here from this resistance. 20 MA is just below. If we lose that, then you have your 50-day below. You have an open gap up there. Apologize, guys. I hear my kids in the background. I hope it doesn't come through on the video. But anyway, it is what it is when you have family. I'm downstairs with the door closed, but kids running around, dogs barking. Can apologize. All right, moving on to the bond market. Here's chart 47, HYG, pulling back right off this coil. As you know, this has been lagging relative to the S&P. At the time, I've been wondering if it could have taken out the high and formed divergence, but it's also possible that it may not. Chart 48, here's the S&P versus high yield corporate. Remember, I've been pointing out this divergence all month long. While the S&P has continued to make new highs, this has not. And you could see back there in October, we had a divergence where high yield corporate had a higher low versus a lower low in the S&P. That was a great signal, and you had a good signal into July when you had a negative divergence on the high yield corporate versus the S&P. So these divergences are always something to pay attention to. Chart 49, here's the 10-year treasury yield. Again, the market sold off today despite the big sell-off in rates today. I've been postulating this as an ABC bounce, and nice break of the channel today. Next, chart number 50, here's TLT 20-year bonds. Nice move after breaking that downtrend channel that I've had in place. Been a nice little long trade. Now, the easy trigger on TLT was this 2-hour time frame. I've been showing this since the weekend. You had a nice clean channel. You broke over the channel on Monday. I put it whenever I have something like that, I just put a stop at the higher low right there. And then I just continue to move the stop up. You could probably move it up again. This is a little supply zone. There's an open gap here, but this looks good. This looks like it wants higher, quite honestly. Congrats if you took this trade. Chart number 52, here's the bigger picture TLT. Again, as you know, the bond market got absolutely hammered over the last 3 years. It was in a bear market. Had a fifth wave low into this demand zone. So I made a good call on a major bottom there. I think it's going to spend much of the year in this ABC type formation. But again, as this comments state here, this is a secular change. Bonds are now in a secular bear market. They were in a secular bull market for all those years. So I do not expect bonds to go back to the new highs. I expect some sort of lower high, but this could play out over time. This was over a 3-year decline, so this counter trend ABC could take up to a year. Moving on to commodities, chart number 53, DBC. Again, most of the commodities pulled back today. Tagging some of these moving averages. We'll see if it finds support there. Chart number 54, there's the bigger picture monthly. Again, to me, this still looks very constructive, but remember, this is going to take time to play out. See your moving average ribbon pinching. Chart number 55, crude oil. Again, nice pullback over the last couple of days. It couldn't hold that 200-day moving average. We'll see where this ends up. Chart number 56, natural gas, down 3.5% for the week. Not a lot of, if we lose this 195 here, not a lot of support until you get down to the 150 area. Chart number 57, copper, nice bounce up. Chart number 58, DBA, this has been a very strong sector. Remember, we had it in this pattern for a while. A couple weeks ago, broke out of that. That could have been your long trigger. Chart number 59, here's the weekly. I like the weekly chart. You have a bullish cup and handle here. If this plays out, this could be a very nice swing trade. Looking at the uranium market, chart number 60, URA, had this flag pattern, triggered yesterday, a little pullback today. Again, if you're long, have a stop in place. One stop, if you want a wide stop, would be at that higher low there. Chart number 61, here's the monthly chart. Again, like a broken record. I've been bullish on uranium since late 2020, and I was bullish last year when it broke this coil, and potential target zone is up in here in the 40s. Chart number 62, Bitcoin, again, had that divergent high, remember in early January, on the buy the rumor, sell the news, big pullback, bouncing up. Let's see if it forms a lower high perhaps. I think it could form a lower high if the market has started that correction. Chart number 63, here's Coinbase, Cathie Woods. This is a little steep wedge, a little bounce out of it, but logically stalling around that 50-day moving average and down sloping 20-day. I hope you took some profits there. Because to me, that doesn't look like a great bottoming pattern, just was a trade. Chart number 64, here's a 60-minute chart. Someone posted this early in the morning, said it looked like an inverse head and shoulder pattern, and it kind of has that look, but definitely a big sell-off here. Again, for this to be an inverse head and shoulder pattern, it needs to reverse up. If it just sells off strongly from here, then this is negated. But if it can reverse up and take out this trend line, then you got to trade maybe up into this area. Chart number 65, US dollar. Again, bouncing up, still around this 50% fib area. Chart number 66, gold, up today, but again, the problem I continue to have with this area is the stocks. This is the GDX-GLD ratio continues to underperform. That's been the issue. Chart number 67, silver. Again, honestly, just over the last year, it's been chopping around in this big old pattern between support and resistance. Here's the monthly chart. I prefer to look at this because it shows this big coil. And again, this could ping pong inside these converging trend lines for quite a while still. Remember, these are monthly candles. Looking at the stocks, here's GDX weekly view, down about 0.5% for the week. Again, it's in this big coil pattern that's been developing the last couple of years. The gold bugs, they really don't want to see it break this lower coil. That could start a big sell-off. Charber 70, here's the daily. Again, this bounce continues to kind of look like a bear flag. Just really don't have any interest in being aggressive in this area. Charber 71, here's the 2-hour view. It was trying to bounce, and now it looks ugly, quite honestly, unless this can recover right away. Now let's go ahead and move on to some other trade ideas. So Charber 72, NVIDIA, our long idea back in early January, one hell of a move out of that pattern. Still holding that 9 EMA. That's probably where I'd put a stop just below that if I was long this for a trade. Okay. Again, excellent trade from down there. Charber 73, Microsoft, again, nice sell-off here. Remember, this was priced to perfection coming into earnings and selling off, but it was a great trade from this coil. Charber 74, Google. I mean, again, you could see the problem here, guys. A lot of these FANG stocks were priced to perfection, and they're getting hammered in this earnings season. Charber 75, BDTX. Now, here's one of the bright spots. This was a long idea I put out on Monday, or actually it's been out for really a couple weeks. It's been on our watch list for a while. A little low price stock in this rectangle pattern. Finally broke out yesterday. Another follow through move today. So this is up about 25% in 2 days. Excellent trade winning percentage. Charber 76, ALPN was a long idea from last week. I put out as a Momo play over the 22 area. Been a heck of a trade. I'm no longer in it. It was meant to just be short term. Charber 77, PTLO was a little aggressive long from last week. It gave you a trade up to the 20-day. Hope you took some profits there as it's pulling back. Charber 78, RVSN. Long idea from a couple weeks ago around this 3 area. Hit 23 bucks. So it essentially went up, 7, 8 times from where I had it. Crazy. I've tried to short it and I can't get shares because fundamentally I do not like the company. Charber 79, Hershey was a long idea from over a week ago. It was a nice trade inside the coil. Popped out yesterday. Hope you took some profits and pulling back today. Still holding the trend line though. Charber 80, here's the 2-hour view. You can see my stop progression. I like to put it initially at the higher low, just move it up. And we still got a little bit of this left with the stop in place. Charber 81, CX, kind of a cup and handle potential. It's been on the watch list for over a week. Charber 82, NVEI was a long idea yesterday, pulling back though. Again, needs to hold that 50-day, quite honestly. Charber 83, Lab, and on the list. Needs to get going. If it loses this 225, I'm removing it. Charber 84, Rivian, along with Tesla, has been pulling back. Charber 85, TSBX, a long idea. It's been on the list for over a week. It's still valid if it can take out this resistance area. Obviously down a little bit today with the market. Charber 86, IHS, kind of a low-priced stock, kind of a wedge. But again, no trigger, no trade. Charber 81, here's another low-price stock, NAAS. Kind of broke out of a wedge here recently. Got a bull flag here over 163. Again, these are low-price stocks. Be careful with them, guys. They're obviously, not good fundamentally. They're trades. Don't marry them. Don't put a ring on them. Or remember, cash is a position. If you want to sit back and wait for the market to, settle down a bit, no problem sitting around in cash. The one problem a lot of people have is they trade too much. All right, guys, that'll do it. We'll see what happens tomorrow. Have a wonderful evening. Take care.